Good afternoon, folks. Good evening, good morning, depending on where you are watching from. On Nasdaq US 100 on daily chart. This daily chart. So we could see a fair value gap of last week. Last week fair value gap. This May 1st, we have each candle here is a daily candle. That's first May, second May candle, then third. That's Friday, the fourth. Yeah, which is Friday closing, today being Monday, 5th May. So we could see the first May fair value gap. This is the fair value gap and inefficiency. The gap between this candle week high, the 29 April high, between the first May low, the candle week, the low of that week, and the high of this bullish 29th April high. That's inefficiency, fair value gap. So you're measuring from the low of the May 1st low to the high of the April 29 high. So the gap between May 27, April 29 and the May 1st, that's an inefficiency, fair value gap. You could see the gap there, no candle body closing that gap yet. This candle, this second May, is higher than this low. So here is an inefficiency, and we're anticipating price coming to fill it up. Then before taking this high over here, this is a high buy side liquidity. Friday closed in a fair value gap and inefficiency over here, and here is an order block, daily order block. That's up close candle there. That's order block. Price coming to fill this inefficiency force. There is a void, so it needs to be filled before trading up there this week. This is still Monday, so we're anticipating price coming to fill this gap going into Tuesday, Wednesday. Today is still Monday. Yeah, annotate your gap. As daily fair value gap. We change the color to your preference. We have a daily fair value gap, and this is a sell liquidity. This low here, the high of it has been taken. The low is still yet untouched. So the algo will seek for the low of the high of this May 1st. The low of it is the low of it, which is acting as a sell liquidity. Sell liquidity as daily sell liquidity. As daily sell liquidity. So you could go over to 4-hour time frame. This 4-hour time frame. That's the opening gap range, the new week opening gap range between Friday closing on regular trading hour and midnight Sunday midnight. That's 4th May. Trading to Monday opening, 5th May. This Monday opening, while this Sunday midnight opening. So between Friday closing and midnight, Sunday midnight open. That's new week opening gap. The gap you are seeing there, that's a void between where the body open and where the body open on midnight, Sunday midnight. That's new week opening gap. Week opening gap. Note that. New week opening gap is the gap between Friday closing and the Sunday opening. So to get a 50% of it, you use your Fibonacci. This is Fibonacci retracement. You anchor from the opening to the closing where the week close. What you are looking at for now is the 50% level. So you have to off all this. What you are looking at for is 50% level of Fibonacci level. You count from the right side 1, 2, 3, 4, 5. That's the 0.5. The 0.5 is the 50% level. That's the half of this new week opening gap. It is a consequent encroachment. You annotate it with your horizontal array. You can now remove your Fibonacci. You can change the color of it. As a new week opening gap consequent encroachment, the 50%, that's the half of that inefficiency. We treat it as an inefficiency, it's a void. Hold on. Need to grab that. So this is the daily sell liquidity. And here is the new week opening gap. On Friday, Thursday, Friday, we had an inefficiency. This is an inefficiency too. You could see how price have violated the consequent encroachment of this inefficiency, this BC, buy side inefficiency, sell side imbalance. Between this bearish candle, other block up close candle there, the low of it, and this high of this bullish candle, the high of it, you anchor from this to the low. That's a consequent encroachment of this inefficiency BC. You could see how price violated it, validated it. That validated it has been validated with a candle body. So you annotate it too. First price coming to the consequent encroachment was rejected. Then second on Monday opening, the candle body closed at the consequent encroachment. Then we trade above below it. That validated, it has been validated and is going to act as inversion fair value gap. That's how you treat your inversion fair value gap. You have a sell liquidity, that's daily sell liquidity resting above an inefficiency here. Also an inefficiency BC resting below here, which we would like to anticipating price to fill it up. You annotate it too as 4-hour inefficiency. A 4-hour inefficiency, 4-hour BC. This is daily fair value gap. This is daily fair value gap. You have to annotate all this, then extend it to your right for future price purpose. This way you could be able to read price action. So this inefficiency over here has been validated. That's the consequent encroachment of it, the 50% of this inefficiency. It has been validated. So we're going to treat it as an inversion fair value gap. Price coming over here again, it will now act as a discount area, sorry, a premium area. Before it's acting as a discount for this kind of rejection block over here. So price validated the 50% of this inefficiency. Coming back to it again is going to act as a premium level, that a strong PDA premium level. So price will seek for a discount area. That is a discount area here. Discount fair value gap. No candle have fill it up yet. So it's a void, an inefficiency that has to be filled up. And price have to come and deliver inside it. Today is still Monday. So we have patience throughout this week. We could see price delivery inside this 4-hour BC. For Friday, yeah. Then we seek for the high over there. Go over to 1 hour. This 1 hour. That's how 1 hour look like. That's the 4-hour BC and the daily fair value gap BC2 and the daily sell side liquidity, which is our target. Our target for this week. And 1 hour, this 1 hour inversion fair value gap. If I'm to buy, if I'm going long, I will wait for price to deliver inside this inversion fair value gap. This is a high over there, which is a breaker. I have an inversion here. The price has validated the consequent encroachment. That's the 50% of it. That's the 50% of this inversion. It's a CB before price validated the consequent encroachment. You could see the rejection block as price has validated the consequent encroachment. Coming back to it again, acting as a discount area, a strong discount area. A rejection block too. Then a small fair value gap there that price delivered into and fill it up, then went up. This Monday, you could see how price is kind of slow. That's a new week opening gap between the high of the low of that week and the high of this week. That's new week opening gap. This is a break of structure, and we price deliver inside a daily inefficiency, and this daily order block, this daily order block this daily order block is a premium area, then a market shifting structure. Here is a market shifting structure and a fair value gap there. You have a set side liquidity resting below here too. This is a set side liquidity. That's 1 hour set side liquidity. That's 1 hour set side liquidity. Buy side taking, then a market shifting structure, that's changing the state of delivery. Is there any fair value gap after a break of structure? Yes, that's a fair value gap there. This is a fair value gap. This is the best ICT 2022 model. After a break of structure, wait for a fair value gap. If there is a fair value gap, wait for price to trade inside it. That's a fair value gap there. That is CB. Sell side imbalance, buy side inefficiency. They have a load here. That is a sell side liquidity. Time is still is 8:47 a.m. So going into 9:30 opening price, we like to see a run over here to take this sell side liquidity. Then this inefficiency over here will now act as an inversion fair value gap after price validates the consequent encroachment of it. The consequent encroachment has been validated. So price will seek for this sell side liquidity. You have to know that the first touch at the consequent encroachment was rejected, then trade up to the fair value gap created after a break of structure. This is a break of structure over there, a market shifting structure, then a fair value gap, trade inside it, then we seek for a low, the next draw on liquidity. Here is the next draw on liquidity. This is our target today. So the consequent encroachment of this inefficiency has been validated and going to act as inversion. You see the price rejection there, price rejection before this block candle body, trade below it and close, open and close. That they have validated the consequent encroachment of this inefficiency. That's how you interpret price action. All these major areas of the PDA areas. So this is the next draw on liquidity, the sell side liquidity, 1 hour sell side liquidity, which price we draw to by the end of today. Then towards the end of the week, we anticipating price delivery at this inversion fair value gap consequent encroachment over here. So that's for price action today. So thank you for watching and I appreciate you. God bless you. Be safe.